So today I'm going to go over what's an IPO, should I be investing in IPOs? If I do invest in IPOs, basically which ones tend to outperform the others. What is an IPO? An IPO is an initial public offering of stocks. So this is pretty much the first time most investors can get their hands on that company's shares. But it's not the first time that the shares are sold. So effectively, there's many rounds of investment before a company generally goes IPO. These may go to like venture capitalists and other people that gave early rounds of funding to the business. And a lot of employees at startup companies, they don't get a high salary, but one thing they do get a lot of is company shares. So they really hope that the company takes off, has an IPO, and eventually they get to sell the shares and make a huge profit. Nothing's guaranteed, of course. They could lose everything if the company goes bankrupt. Why do companies have IPOs? Because, many companies could be private companies and fund themselves and not go onto the stock exchange. So why do companies do it? So basically, it gives them the ability to raise money or capital investment by selling shares. So if they have a lot of shares of stock, they put it on the market, and effectively they sell it, and whatever it's sold for, they get most of that money. Note that about 80% of the IPO companies are actually losing money when they go to the IPO, so they need investment or debt. And the reason for that is if they're losing money because their bills are greater than their income, they need to avoid closing the business, or they want the money to expand, or it could be for R&D or many other reasons. So in addition to the companies which are selling the stocks to basically raise money, you also have those initial investors and the workers at those companies that have a lot of shares, and they may want to dump that supply of shares onto the market. And in order to avoid having a large number of shares being dumped on the market at the beginning, effectively there's some type of lockup period. This is the time that the early investors and workers are not allowed to sell their stock. This typically is about 90 to 180 days, but it could be sometimes up to 24 months. So why? Well, number one, it avoids competition during the company fundraising or stock sale during the initial public offering. That gets the company as much money as they can because there's a fixed amount of demand for the stock at a given price. So they want to get the highest price they can. Now, when the lockup period ends, these people tend to dump the stock, which increases the supply. And if you increase supply without changing demand, you normally will reduce the price. And being that it's been, a couple of months since the IPO, people generally don't have as much interest in that stock at that point in time. So it really does reduce stock price. So I'll give you a few examples. Now, these are all above $1 billion IPOs. They're considered unicorns. These are just three of the ones that popped up in my head. So I looked up Palantir, Airbnb, and Uber. Many people should be familiar with these. So I have the IPO numbers for Palantir at 920. It topped out about $35.18. And then a few days post lockup, it went from $35.18 and dropped down to $23.90. Now, several years later, after it became profitable, it's now at $85.85. Realize that when we had the lockup period, it did take a significant drop. Airbnb, so it had IPO'd at $139.25 roughly for that day, and it topped out at $212.68. And then a few days after post lockup, went down to $134.71, and it has not really recovered. It's down at $120.69 today. Uber is the other one I have listed here at $41.57 on IPO. It then went up to $46.38 and then took a tumble for a period of time. But if you look just a couple of days after lockup, basically it went down to $27.01. In each of these cases, even though these are $1 billion plus IPOs that did generate tons of revenue, you would see a drop in the share price just a few days after lockup. Basically, you've increased supply, the demand's not really going up that much at this point, and the shares are going to go down in price because you have a supply and demand balance that you have to figure out for price. Anyway, that ultimately went to $72.75 as of today. If you look at all of these, you can notice that generally during an IPO, you have a price for these unicorns. That price usually goes up as there's a quick burst of demand as people are interested. As that demand wears off, it may move up, may move down a little bit, but when you go to the lockup period, generally it will go down, and who knows in the long run what they're going to do. I like to look at data over, many companies, not just 3 companies that are all very large companies. So let's look for IPO returns. About 70% underperform the stock indexes. So if it's a large cap, it would be compared to the S&P 500 or the Russell 2000 if it's small cap. Only about the top 20 or so percent grew in value of at least 50% over a 3-year period. If you look at IPO sales and size, it really tends to matter here. So if you have something that's valued over $3 billion when it IPOs, the 3-year return is a median return of over 16.5% above, say, the S&P 500. The median of all the other companies is effectively negative. So that gives me an indication of where should I be focusing. The next one I'm going to look at is sales. Basically, what's the revenue? It doesn't necessarily need to be profit or loss or whatever, but what are the sales? So if it's less than $100 million in sales, it generally has a negative return at the 3-year mark. If it has over $100 million in sales, it's positive return at the 3-year mark on average. If you look at the top 25% and you look at the return, it's positive regardless of whether it made profit or loss. So which IPOs tend to outperform, say, the S&P 500 or the Russell 2000? And what I'm going to say here is, effectively, if I have very large valuations at the IPO, at a 3-year return, the median return was about 16.5%. So that gives me an indication that I want to be looking at the larger IPOs, not the tiny IPOs. The next one, I'm going to look at the sales. If it has very low sales or very low revenue, less than $100 million a year, I don't want to touch that. I'm going to look at things that are making more than $100 million in revenue in those sales because I see that they've had positive returns. I'm also going to make sure that it's in the top 25% of all of the IPOs in that period of time. And what I'm going to look for is basically if it's in that top 25%, what we've seen in the past is regardless of whether it has profit or loss, it's had a positive return, on average. For me personally, I like to invest 80-90% of my investment portfolio mostly in the S&P 500, about 10% in international stocks, the rest, 10% or so, I change from time to time. It may be high yield savings, CDs, bonds, things like that. If you're interested in learning how to make more money, how to save, and how to invest, this is a channel that covers all of those topics. Please subscribe. I would love to talk to you. If you want to, you can join the Discord channel as well. And be aware, I don't charge anything on Discord or YouTube or anything like that. So if you see anybody trying to charge you money or whatever, it's some type of scam or some type of bot. They've been targeting me lately. All right, well, thank you for watching. Please subscribe and have a great day.